All right, I've welcome back for the episode of Carnivore Trades. Today is Friday, December 16th, 2022. If you're not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Having a really good week this week, by the way. Booking several winners and in the money on a lot of other things here, adding to an already great year and really trying to cap it off strong here. So if you're interested, haven't made the plunge yet, can encourage you to jump in and get in on that. Anyways, as we mentioned yesterday in the live stream, we have an impulsive sell-off here. So let's take a look. Really going to focus in on the triple Qs here because we're looking at this channel and we've been watching that for a couple of weeks now. And the spiders are a little bit skewed here today because of the dividend, but either way, triple Qs here down. Doesn't look like much, only down about 80 basis points currently. We are a little bit off the lows, but take a look at this level here, upsloping channel, and then that green bar that is a failed inside bar. And one of the things I mentioned yesterday in the live stream is we came down here and then we touched the upper end of the channel, came down, touched it on this side, and then we came up here and we made a higher high off of those Jay Powell comments. And I said the CPI would likely be a sell the news event once I saw this big green bar, but we got a slight higher high, then we pulled back, and we got another higher high, but neither of these two latest highs got up to this yellow trend line. So that tells you momentum is declining, and we now have an impulsive breakdown here of that 50 moving average. Let's flip over to the spiders here. I want to show you the weekly time frame, and we'll get rid of, well, let's just look at it as is right now. So take a look at the 50 moving average and this all-time high trend line. And just remove that. You can see the 50 MA a little bit better. That's a clear, and I mean clear-cut rejection with volume. So we got good volume there on the weekly. I'm sure there's someone out there that's going to say, oh, this is just OPEX games. This ain't OPEX games. Is there OPEX stuff going on today? Absolutely. And yesterday. But you got to remember, this is 3 years worth of OPEX too. So there's a lot of open interest, a lot of moving around. And believe it or not, I know this sounds like craziness, but believe it or not, guys, there is more to the market than just the options market. The big money, the really big money on Wall Street, you think Stanley Druckenmiller cares about weekly SPY call flow? No, of course not. So when you break these levels here, and by the way, yesterday, a ton of money, a ton of quant money, about 30 billion, in fact. Yeah, I got the tweet. I can put it in the comments here. So I don't have my other window set up, but $30 billion of quant money had to flip short based on the close on the futures below 39.33 yesterday. And I think that's a lot of what's driving the move down today. If you asked a lot of people, in fact, I heard a lot of talk yesterday about Max Payne, 389, 391. And I think, again, going back to just what I was just saying, there's more to it than just the options market. I know the options market's important. Market makers do have a huge impact on the market, but they're getting roasted today. And there's really no other way around it. So, and the same thing, here to talk about the dark pool. Oh, they're accumulating in the dark pool. Well, whoever was quote unquote accumulating just got destroyed. So just follow price here. Big gap up, rejection, sell the news, the 50 moving average on the weekly. I mean, that's about as damning of a look as you're going to get here, and nothing is really safe here. I've been talking about the semiconductors quite a bit here, and it looks like we're going to get a failure of that green bar low. We do have 40 minutes left. I'm doing this video a little early. Who knows? Maybe they save it. I mean, it would be just like that, the market to just close it above that. But I mean, the amount of technical damage that's been done lately is just, it doesn't, one good sector here does not change everything. And that's kind of what I said yesterday, looking at the transports as well. We're right on that yellow lower trend line there. We did bounce off the 50 moving average. We're hovering right around that 100 MA. You have that green bar low that's currently getting defended here. So transport's still managing to hold up at least just a little bit here. One sector that is not in the transports is the jets. That just lost the 150 moving average there. So airliners are coming under a lot of pressure. And, really just... one of the biggest losers on the week, like I've been talking about, has been the financials. You got the KRE here that's less than 2% away from fresh 52-week lows. And that's why I've been in the camp that we're not going to have a Santa rally. This is not the type of behavior you see in a bull market. This is ugly, ugly price action here. Financials are very important. When they break down out of nowhere, it's usually a sign that something is not right. See the KBE there as well, and the XLF hovering right on that 100 moving average there. We just booked some profits on our SKF position, which is 2 times short. Fins there, and again, it's been a really nice week for us here. Anyways, let's get over to, I want to point out the Dow here. So we have a nice trend line here going back to the all-time high as well. And that got tested this morning as well as the 50 moving average. So maybe the market get a little bit oversold bounce here. I mean, we are really oversold on the hourly. Just to flip over to the spiders, give you kind of a look here on, kind of the RSI there. We have a pretty good bullish divergence there building up on the RSI, and it's very oversold there. So again, maybe we get a little bit of a bounce. I think we possibly test lower prices though. Monday, Tuesday, there's a pretty good level I've got on the SPX. And again, I'm trying to use the SPX there as the spider's dividend kind of throws everything off a little bit. But that 50% fib there, right around 3,800, that should be a good bounce level. If we don't bounce, Monday, Tuesday, I think that gets tagged regardless next week. But that is a level I'm watching here. Going into next week here, but a pretty ugly close pretty much across the board. Again, maybe they get some short covering here in the final hour. I wouldn't make too much out of it. It's definitely too little too late at this point. Take a look at the Russell as well. So that is now through that gap, which is a big level for the Russell. So it filled that gap and then blew through it today. It is kind of rallying. You can see the IWM in the corner of my screen there, starting to just rally a little bit off the lows. But I mean, this is not a good look anyway. You slice it or dice it. And again, it's an impulsive sell-off here with good volume. And it was a sell the news event for sure on that CPI number. Flipping over here, so we got through the indices. We talked about the semiconductors a little bit. They're hovering right on that area here. But I want you to look at NVIDIA. This is the biggest semiconductor, at least the most important in the SMH anyway. And again, 50-week moving average rejection, just like the spiders here. So NVIDIA is up. I mean, you're taking 105 to, it went to 185. I mean, that's like almost a 90% move in a couple of months on NVIDIA. That's a huge move there into that 50 moving average. So maybe a little overbought here. That's all I'm really saying here. But all things considered, SMH itself still has technically a bullish pattern here. But again, it did try to break out this week. And getting rejected at that 50-week moving average, if you're not going to break out, you're going to break down. So this really needs to get something next week. I just think there's been too much technical damage done across the board, and that's really the way I'm looking at it right now. IGV here, down 0.5%. Actually hanging in there okay, believe it or not. This is still not a great pattern here, not a pattern of strength. Again, you still technically have, this weekly inside bar here, but it tried to get above the 20-week moving average, much like the SMH with the 50, and was unsuccessful, now closing back at the lows of the week. It also negated this green bar last week, so I do expect more weakness in cloud. But again, it is holding up a little bit better here today on a relative basis, as we haven't taken out the lows from last week, whereas pretty much everything else has. So again, a little bit of a mixed bag. I'm not bullish on anything in the cloud space right now, though. Transports, we mentioned a little bit. Again, holding that 50 moving average, holding this yellow trend line. So again, maybe it can bounce up next week. I think it's a sell the rip type move, though. We're back in that environment now. If you ask me, we're also seeing a lot of today might even be tax loss selling. So take a look at Amazon. This is basically at 52-week lows. Tesla, fresh 52-week lows today. This has been getting destroyed. Microsoft, rejecting that 200 moving average the other day. Nice sell-off there. Meta is up because they had some news today, so that is up a little bit. But I think there's also the possibility we see some tax loss selling, maybe even in the ARK names. ARK is at basically fresh 52-week lows. So these things that have been down, all year long. I mean, take a look at this. $96 down to 33, and you got things like Carvana, one of our favorite stocks here at Carnivore Trades. We traded that a few times this year, but these things, these names could come under pressure here, which I think could also, for what it's worth, could also give us a possible January effect. And what that means is you get that tax loss selling in the last couple of weeks of December, and then you kind of get a rally, counter trend rally. So there are some things I'm looking at here, possibly for some tax loss selling. Take a look at Netflix, broke through that rising wedge yesterday, and that's actually green today in a down market. But again, that's also the tax loss purposes are potentially putting more pressure here on the market as we get closer to the end of the year. Anyways, before I get too lost, interest rates here, again, the 10-year just kind of stuck sideways in this little bit of a range. It could be a bear flag, but for the most part, if we look at the weekly, it really just looks like a pullback into the 20 moving average, and now you're just kind of hanging in there in this area. You do have an upsloping trend line too that we're kind of coming into, so we'll see if that gives it any juice here. The 30-year as well held up really well this week, and you do have kind of like an inside pattern there. I still like the weekly though. I still think this is a pretty decent pattern here on the weekly for a bounce. Not saying it blasts off to new highs, but I do like this. I think it's oversold here, and I think that is a good support area right below that right on that 3.4, 3.5 area there. But interest rates basically for the most part flattish. I mean, 1% for the 30 years, not nothing to sneeze at, but in this environment, it kind of is. The 2-year actually got a pretty good bid here. It was down quite a bit this morning and actually got a nice bid here. If we look intraday, nice reversal there. So it's holding up and then kind of backing off here as we get into the afternoon. The 2-year might actually fill out that head and shoulder pattern after all. And just to bring it up for you. So it's right about, it's right there. And then we just copy that. And there's our breakout. So right up in this area. So it's not far away, and you're starting to kind of get a little bit of an inside bar here. And you do have bullish chops. So it could get, the 2-year definitely can get up to that area. Maybe even a little bit through it, as there's that pivot low that has never been back tested. So right below 104, or, maybe 104 even would be a good area there of resistance on the 2-year. Could be where it wants to go here in the near term. Anyways, XHB. Pulling back a little bit, down 1.65%. Nothing terrible there. Again, this is still a leading sector right now. ITB, same thing. I do think these will be shorts, though, coming up in the future. Maybe not quite to the end of the year, but maybe into January. Then VNQ, ouch. So down 2.83%. Really needs to hold. So this green bar low is 83.95. We are below that right now. We've got 30 minutes left, so there's plenty of time for them to save it. Let's see where we're at. Yeah, we're hanging in right there. They're going to have to squeeze it up here a little bit more. They can definitely do it. It's not that far away. But a close below that negates this head and shoulder pattern, inverse head and shoulders, and now this target would be off limits. So we'll be watching that going into the close, and of course I'll update you guys next week on that. Anyways, XLF, we did mention that a little bit, down 87 basis points. Again, trying to hold on to that 100 moving average. Like the IWM, it got through that November CPI gap, and then it continued selling. But it is into a little bit of support here, so it probably does get a counter trend bounce, maybe back to, gap fill 34.75, somewhere in that area, right in that vicinity, would be a logical back test area for XLF. XBD, monumental collapse here. So again, this is it has been a powerhouse sector really ever since June. And again, like the Qs, a very impulsive break here. I thought maybe you would test that double top. Didn't quite get there, and we had a nice reversal and impulsive move on XBD. There is good support here around 440, 445 though. So again, could come up and back test that 460 handle next week, but a nice breakdown there for the broker dealers. On to crude. So crude, SPRs, they're buying back. They're buying it back. Uncle Sam, good job. You sold high, and now, or you bought. You dumped it while it was, what am I trying to say? You guys know what I'm saying here. They're paying more for it now. And they had a chance to buy it back years ago when it was $30 a share, or $30 a barrel. But anyways, we're trying to buy it back now. In any case, before I get tongue-tied here, again, we rejected that 20 moving average. We got a nice little pop intraday off the news, and I think it's becoming a little bit of a sell the news. So I've been talking to you guys about that 65, 67 handle on crude. This could be it. This could be what gets us there. Again, it's OPEX, so maybe they held it up a little bit for that reason. But we'll see what it does next week. I wouldn't do anything with it at the moment, but it's hanging in there and congrats to the Biden administration on that great trade. XLE here down 1.2 or 1.12% on the day. It's holding the 100 moving average, and this continues to be a strong sector here as it has not made lower lows with the rest of the market. I still think it has more backing and filling to do. Same thing with XOP here. But, you know, for what it's worth, they're holding up okay. Let's actually extend this trend line. So basically, you can make a case we kind of just back tested this trend line here. See if I can move that a little bit. There we go. So that's a little bit more exact. But yeah, XOP holding up okay. I still think it has lower to go, and I'm still maintaining that 250, 260 area on the OIH. But again, energy is holding up well, and that's with yields not doing a whole lot. So a lot of interesting movements here. Again, we talked about the dollar, which we will talk about in a minute. The dollar strength is not really putting pressure on the markets, and the dollar weakness isn't really helping as much as it was really all year long. So we'll see how that correlation shapes up next year. Anyways, nat gas, testing the lows here, testing the 50 moving average, getting a bid. Again, nothing too new to add to it. It's been all over the map. This is definitely OPEX related. Up, down, up, down, up, down, up, down all week long. I would be shocked if that wasn't OPEX games going on. Dollar index is higher today by 8 basis points. But again, you've seen the market down much more here. And again, it's not like a month or two ago, you'd think that the dollar up 8 basis points, you'd think the market's flat. But we're actually taking quite a bit of a hit. And we are getting a little bit of short squeeze here in the last half hour. So some short covering profit taking most likely. Maybe a little bit it's OPEX related. They want to keep it away from that 380 area. There's probably some puts being bought here at the lows. I'm sure that's definitely a possibility here. Triple Q's now down only 60 basis points right now, so we'll watch that as we get closer to the end of the video. But in any case, dollar index holding that 104 area for now. I still like it down at 102 a little bit better. Gold here holding up okay. Nice bounce off the 20 moving average. It still has more backing and filling to do, but it's hanging in there okay, so nothing too new to add to it right now. And then we have silver here. Nice bounce off the 20, but again, this still has to do a lot more backing and filling for me to get interested in on the long side, but I will get interested once it does that. Platinum here backing into the 1,000 handle. We'll see what it does. So we're right into that lower wedge trend line. I'd prefer it down at this trend line, though. If we can get a push down to there Monday, that could be a good area for a pop, maybe back up to that 1050 handle. But again, platinum just still kind of wedging in here, and I like this consolidation that it's showing me on the daily time frame. Copper here a little bit lower today. Nothing great, nothing spectacular, still inside of this wedge. Let's not make too much more out of it than that. And then Bitcoin getting rejected here. Again, we talked about that 50 moving average there on the daily, and it continuing to the downside, down 3.28% today, back below this green bar low. So really Bitcoin and crypto just can't get anything going here. Even these kind of micro bull patterns just don't seem to play out here. And again, you guys know my thesis on Bitcoin. I do think it has to go lower in the future. Anyways, back over to the spiders here. So getting close to that 385 handle again. We'll probably stall out in this opening range here. We got a pivot low right there on the triple Qs at around 276, we'll call it. So we'll see what happens here. Ultimately, either way you slice or dice it, this is an impulsive move to the downside. Markets are a little oversold. We'll give that, I definitely can say that on an hourly basis for sure. I mean, here's the triple Qs, we were at 296, 297 4 days ago, and we got all the way down to 273 today. So a little oversold. We are due for a bounce, but I think at this point, the amount of technical damage done, it's a sell the rip move. Anyways, guys, going to wrap it up here. You guys have a good weekend. Come find me on carnivoretrades.com. Talk to you all next week.